If you've got money, you're going to want to pay attention to this because inflation is ruling our life. We're getting mixed signals from the stock market. Wall Street wants to go one way, central banks another. Our White House is gaslighting us, telling us that the problems in the country are our fault, that we should be better with money. Yet the Pentagon can't find $3 trillion. They're running out of money. They're borrowing from China to give to Ukraine. We are in a mess. Todd Bubba Horwitz, thank you for being on the show to help me go through this stuff today.
Steven, it's always great to be with you. And man, I got a lot to say about what's going on here right now, I'll tell you.
Good. I want to hear it. Let me start off with this. Gas prices are starting to come down. However, I read today that energy stocks may see a pullback because there's too much oil. So help my community understand two things. What does too much oil mean for gas prices and inflation? And then from a stock market perspective, energy stocks, what does that mean?
Okay. Well, let's first look at that 80% of everything you do in life revolves around fossil fuels. Okay. From your driving your car to heating your home to having goods delivered to the store you buy from, right? So now we gave full control to OPEC and Saudi Arabia for oil. And of course, right now there's a glut of oil in this country. Why? Because of course the economy is very bad. As much as the government would like to tell you how good everything is, it's bad because we're not consuming oil, which means we're not driving our cars. Not that many people have electric vehicles yet that are hitting that. You can bet on this, that Saudi Arabia and OPEC will continue to cut production until they get prices right back higher. Right now, prices are going lower, and with lower prices will mean lower profits, which will mean lower stock prices. But really, I think those will be buying opportunities for an investor, because again, you want to buy into weakness of something that is going to be stronger. And we know that no matter what we hear about the EV world or electronic vehicles and all this other stuff, it's a long way away before we stop using fossil fuels. Those companies are going to survive and be strong. And in the meantime, they're all setting up to get into the next phase, very similar to what happened in the tobacco industry, letting all these companies get into new phases before they actually phase them out of actual real profits.
Okay, interesting. So when gas prices were approaching $5, the White House and Biden, every speech, the president has no effect on the price of gas. But now prices are coming down. They're trying to take credit for that. But you're saying this has more to do with OPEC overproducing than anything the White House has done?
The White House has done nothing except drain our reserves. Okay. They drained our SPR, which is the Strategic Petroleum Reserve. They have not refilled that yet. Okay. It is still drained, which that oil is wartime oil. That is for emergency use only. But of course, to bring the price down. The government has done nothing. They're still charging their same tax on gas across the globe. Each individual state charges tax on gas. Their prices are coming down because the economy is weakening, and because we are in a recession. Whether you choose to believe it or not, we are in a recession, and people are not consuming gas and oil as they would because they have to cut back to be able to feed their family.
Yeah, interesting. Okay. Well, the other thing you need to feed your family is a job. As we head into 2024, there is worry that there's going to be a deeper recession, an acknowledged recession. But with that, are we going to see job layoffs? Because I read this morning that we have the lowest job openings since 2021. Help me understand what that all means.
Well, I think, again, when you look at jobs, okay, and the jobs that we're seeing, yes, there's less jobs open because there's less jobs available, not because we're having such great demand for jobs, but because companies are cutting back. We are having massive amounts of layoffs that nobody's looking at. In fact, Shopify just laid off for the 4th time this year. Meta continues to lay off employees. Amazon is laying off employees going into Christmas. So we're losing jobs. The availability of jobs are creating a mirage because we don't have as many jobs available because companies are trying to cut back and to get ahead of the curve. You go into a Walmart, you can't find any help. Nobody's there. You go into a Walgreens, there's nobody there. They can't get help, and they don't want help because they're willing to allow, in retail industry, the thieves to steal because it's less than hiring an employee. So they're really cutting back. So there's less availability, which artificially makes the number look, oh, there's no jobs available, I better get one. But that's not really the case. The real case is it's being artificially lowered because of the lack of jobs and the layoffs that we're seeing.
Yeah. You point out that there's less people. I feel like the customer service has gotten bad. Everywhere I go, it's like I can't find somebody. The ones that I do find, they don't know anything about the product or the store, or they have a bad attitude, or, oh, I'm sorry, could you take your earbuds out for a minute and talk to me human to human? Like, it's the whole
Could you
reason
quit
you're getting
texting and let
paid.
me get my question? Right,
Oh,
I
yeah.
mean, again,
I should tap him on the
I always
shoulder.
ask, where's the pride going on in this country? And I think that's a big issue, and that's part of it. I mean, the way that we treat and the way that we're employing people right now.
Yeah, well, um, the Federal Reserve is a big topic. I want to hit just a little bit now, and then we'll come back to it. But do you see interest rates going higher, holding steady, or dropping in 2024?
Well, my opinion is they're going higher. My opinion is if you listen to Jerome Powell, he said that they're not necessarily done yet. Now, the markets are assuming that they're going to cut because you can see the rally in this market right now. You can see the bonds, how the bond futures, and just so everybody understands, when bond futures go higher, interest rates are going lower. They work inverse. Okay. So the bond futures are going higher. But I think the real story is that we're nowhere near the 2% inflation target that they set. The only way they're going to slow this down is to continue to hike rates. We saw the 10-year notes print 5% about 6 weeks ago, and they dramatically fell from there. But I think that once the Santa Claus rally is over with, I think we go back into hiking rates, and I wouldn't be surprised to see a hike in January, right after the holidays, right in time for everybody to pay their credit card bills from Christmas.
Wow. Now, you've tracked the market for what, 4 decades?
Yeah, 4.5. This is my 45th year.
Oh, wow. Congratulations. That's amazing. And thank you so much for coming on. I know how busy you are. Um, isn't there always like a Santa Claus rally, like December, and like people are doing their tax loss harvesting? Everyone's trying to get their last sales in, and you see this like artificial boost, and then it drops. What should people be aware of or watching for if they're new to the market, let's say?
I think, look, if you're new and you're an investor, there's a big difference between being a trader, which I am, or an investor, which I also am. I do both, but there's a big difference. If you're just an investor, you just want to find good, solid companies that you like, that you feel are going to be in business for the next 10, 20, 30 years, again, obviously forever. And you want to buy those companies. It doesn't really matter when you buy them, because there's an old saying when you're an investor, you can't time the market. It is time in the market. So you might as well go ahead and buy. But yeah, we're seeing an artificial rally now. I mean, basically, we're being pushed up by 6 or 7 stocks are destroying and running the whole market. I mean, we're seeing a massive rally. The Dow has made new yearly highs. You've had a 9% rally in the month of November, okay, which is unheard of. But again, it is part of the time of year. It is part of what the Fed's doing. And remember, Stephen, we have an overwhelming oversupply of money that was pumped into the money supply that's got to go somewhere. Unfortunately, that oversupply of money doesn't come to you and me. It's up at the upper echelon who gets to put that money to work for themselves, not for us, which is, again, why we get into these problems that the average guy don't understand. Why can't I make the same kind of money? Because I don't have access to that kind of capital.
Yeah, Gal, that's a really great point. You mentioned this like mysterious rally. 2023 ended up being a good year. Then it kind of dropped. Now it's making this recovery. But I recently interviewed Gerald Celente from the Trends Journal. They've been pretty accurate at predicting things. He was saying in 2024, the trend is showing that this high dollar is eventually going to fall. When that does, he believes that there is going to be a flood of money into gold, and we're going to see gold go up. Since he told me that, gold has already gone up over $100 an ounce. What do you see happening in the gold markets as we go into 2024?
Well, as I've told you previously, I felt that gold was going to make an all-time new high this year, and I thought silver was going to get into the 30s. The silver did not get there. Gold did, but I think what you really want to look at, Sunday into Monday was an epic move in the gold markets. Gold was up over $50 on Sunday night, and by the end of the day, Monday, it was down $50. Okay.
Okay.
It was an epic move. that doesn't happen. But I do believe this gold is going a lot higher. Again, I'm not going to make some ridiculous statement like it's going to 5,000, but certainly 2,300, then 2,400. You know, it's markets. All markets have to meet levels and then break through those levels. They just don't go straight from 2,000 to 5,000, right? But China's already bought a fortune. They just bought another 600 tons of gold. Okay, and they're continuing to buy, knowing because they're preparing for what's going to be I think a devastating time of year, a devastating year coming forward. You know, I've said to you before, I do believe, and I still believe this, that the markets are going down 50 to 70%. And that was from the original highs. So we were down close, then we popped up again. I don't think we're out of the woods. I think that these are dramatic warning signs. A move in gold of $100 overnight is a warning sign. These signs start to show up and people ignore them because it doesn't bother them. And the unfortunate thing about life is nobody cares until it affects them directly. And then all of a sudden it becomes a big deal.
Yeah, boy, isn't that true? I don't know if I'm saying his name right, but I know you'll know who this is. El Arian of Allianz.
Muhammad Al Arian, yeah, used to be Penco. He's partners with Bill Gross for a million years. Yes.
Okay. So he said that the Federal Reserve banks need to be more definite in their plan and messaging around interest rate cuts because Wall Street is like frothing at the mouth, getting ready for this tsunami of money. But he worries that their optimism is misreading Jerome Powell and the Federal Reserve rate increase or stable or drop. What are your thoughts on his comments?
I agree with Muhammad. He's very smart. In fact, Bill Gross, his ex-partner, was one of the smartest guys in the world who actually broke a number of pits at the Chicago Board of Trade because he was so smart. But I think he is right. And I think that, again, first of all, until the 08, when did we ever hear from the Fed? You heard from them very little. You heard from Alan Greenspan occasionally. You had an occasional speech, but you didn't hear from them every day. Now they're part of the everyday news, and they're more catering to the markets, which is ridiculous. Okay. The Fed, like if you listen to Ron Paul, and I agree with Ron Paul, they either need to end the Fed or give us a legitimate audit, because right now there's a record number of banks lining up at the emergency lending window to borrow money, telling you one simple fact, that banks themselves are over leveraged. What we saw in this summer with Republic and that I forget the name of the bank, but the bank in the Silicon Valley that went under, okay, that had trouble. That's just the start. Again, it doesn't have to be immediate. Remember, nothing has to be immediately tomorrow. But those are warning signs. Again, these are things that are telling you that there's a lot of problems. Emergency lending windows, swamp, overprinting of money, too much. All these things are things that eventually have to come back and be settled. You cannot borrow your way out of debt. You can't be an ignoramus like Paul Krugman, who says debt doesn't matter, because eventually debt matters.
Yeah. It catches up to you at some point, right? And what do they say? Money is a good servant, but a terrible master. And it just depends on which side of the equation you're on. You're either earning or you're paying it. One more thing from Muhammad El Arain. He said that Wall Street and their managers are becoming too romantic about next year's predictions. He said that people need to remain cautious and strategic. At the same time, one of the heads over at JP Morgan said they are actually predicting 2024 could be a grim year. Do you agree with that? That it's all being over romanticized?
Jamie Dimon, who is the president of JP Morgan, said that it's going to be a very rough year. Yes, Wall Street advisors over romanticized, but there's a reason behind it. Now, again, nobody does anything for free, right? They've got a reason that they're saying something, and they're over romanticizing it because they know that it's a time of year the markets are running right now. So people are getting that FOMO disease, and they don't want to get paid their commission. Let's be quite frank. Okay, they want to be paid their commission, and it's not about their commission. It should be about the client and their people. They don't care about that. They know that they've got a market that's running and people that are afraid they're going to miss this rally. So let's over romanticize it. Let's get them in now while they still got capital left before the stuff hits the fan, because that's how we're going to get paid. And that's one of the things you always have to be very careful about, because there's a lot of quirky, funny business that goes on. And being a floor trader, I can give you specific examples of these things that happen all the time. And I was a floor trader for 35 years, so I can give you I can give you names, dates, and numbers.
Yeah, the things you've seen in your career would shock most people, I think. Um, the last time we spoke, Todd, you mentioned that there was $10 trillion sitting on the sideline. Has that number remained the same? Is it higher? Is it lower? And what do you think is going to happen? Are people going to stay on the sideline? What's going to happen? That's a huge block of money.
If you look at the national debt of 38 trillion, it's really not too big of a number, right? The number, there's always money on the sideline, Stephen. That's one thing. Don't buy in to the BS that is spewed out there that there's money waiting to come in. There's always, if there's an opportunity, there's always money for a good opportunity if people think of a good opportunity. Those things are said to people because they want them to buy. It is no different than what they used to call either front running the market or posting and making up artificial bids and offers so that you could see and you could force somebody to make a decision to go one way because you were guiding them in that direction. Don't think about them on the sidelines. First, you look at your own personal life and your own personal spending. How's that going on? Are you in good shape, or are you in a recession yourself? Then you start to look around and see your friends and neighbors. That'll tell you what the real picture is. That'll tell you if it's time to invest or if it's time to get involved or if it's time to pull in the shackles. But every investor should always invest with some amount of caution at any time, because you can always get in. The markets are open 241 days a year. You can always buy. You can always get out. But if you put it in too fast and you put yourself at risk, that changes your mental outlook. And then you sometimes panic out at the worst possible time because you've overinvested to begin with.
Yeah, no, I've been there. I panicked. This was in 2020, like July or June of 2021. Cosmos Energy had just dropped a bunch. They pulled back their dividend. I ended up pulling out, and then it went up 300%. I was like, "Are you kidding me?" I was like, "That's one of the few regrets of my money life."
It happens to everybody, sir.
Yeah.
It's not something that, again, this is why I try to tell you and teach people ahead of time, relax, start small. You always have time to get more. And if you understand the compounding of markets, just remember one thing. Since the history of the stock market has gone up 8.5% year over year, since 1950, it's gone up 10% year over year. So if you just go by those guidelines, you don't have to get it all in today. Relax, take a deep breath, and don't ever try to be too fast to pull the trigger to get out or to pull the trigger to get in.
Right. That's good advice. Okay, final question. I don't know if you're a capital L libertarian or a little L libertarian, but do you think that they're going to go all the way with Joe Biden in 2024, or do you think Democrats are positioning somebody behind the scenes to come in at the Democrat convention and take old Joe out?
I'm a capital L with you. Okay. And I think that I think this is all window dressing. I think they're going to come in. I would guess it would be Gavin Newsom, who they're going to come in with at the last minute. I think they're hoping he drops before that so it doesn't look like it was a setup. But I think that it was all along. I mean, it was always in my opinion, Stephen, that this ticket of Kamala Harris and Joe Biden was a losing ticket to begin with. And until they realized, when it was so close that they realized they could take enough to get the election on their side, I think that they set that up to be a losing ticket, very similar to McCain and Palin of the Republican Party when they were going against Obama. I don't think they thought they had a chance to win, but then when they found out they had a chance to win, they went ahead and took it. And I don't think Biden's going to be the next president again.
Interesting. All right. Well, time will tell. Todd, you have a book on trading that you are willing to give away. What is the name of the book, and how do people get a free copy of that?
The book is Bubba's Guide to Trading Options. You can see what it looks like on Amazon, but I'll be happy to send you a free PDF file of the book. All you have to do is email me direct at bubba@bubbatrading.com, and I will send you a copy of that book, and you will get to all the options knowledge you need. The book is also filled with quizzes to make sure that you're following along with what I've written, but it is Bubba's Guide to Trading Options. If you email me at bubba@bubbatrading.com, I will send you email you a free copy immediately.
Great. Thank you so much for coming on. It's not often that people get to hear from somebody that has so much in the trenches knowledge about inflation, the country going through good times and bad times, and just the good, the bad, and the ugly of Wall Street, because it can wipe you out. It can also bless your family for generations. It just depends on how you play the game.
Can I give one more piece of advice? Is it
Yes.
possible? Too many people right now are there's a record number of people at limit on their credit card now. Okay, debt. Okay. And please do not, before you do anything, make sure you pay off the credit cards, because the usury rates that you're paying on credit card interest are, first of all, not dischargeable in bankruptcy, if that would ever come to that, but you will never regain the money that you're paying off. So don't overspend on your credit cards. Don't get into the trap because people offer it to you. Make sure you pay those bills off so that you can invest your money and compound the money that you have left.
Yeah, no, that's great advice. Like you say, if the market tells us anything, 7, 8, 9% is a fairly good average. But if over here you're paying 29%, or 30%, like you're not getting ahead. So
Right.
wipe out the debt, be smart, and then move forward and build wealth for you and your family. Todd Bubba Horwitz, thank you so much for coming on. I appreciate it. I hope you have a great rest of your day.
Thank you, Stephen. Thank you very much. I appreciate it.